Walmart beat both revenue and non-GAAP earnings per share estimates for the quarter. However, the company is under pressure from inflation and poor inventory planning last year. Here are some quick numbers. Total revenue was $152.9 billion for the quarter. That's up 8.4% year over year and above Wall Street estimates of $150.8 billion. Non-GAAP EPS was $1.77, which is down 0.6% year over year, but above Wall Street estimates of $1.62. Operating income was $6.9 billion, which was down 6.8% year over year, and would have been worse except Walmart International operating income was up 21.1%, even though Walmart US and Sam's Club operating incomes were both down. Operating cash flow was $9.2 billion, which is down over 25% year over year. Free cash flow was $1.7 billion, which is down 77% year over year. Part of that is due to the decreased operating cash flow, and part of that is due to increased capital expenditure. The cash and cash equivalents on the balance sheet were at $13.9 billion, which is down 39% year over year. Inventories on the balance sheet are at $59.9 billion, which is up over 25% year over year. You can see their cash is down, their inventory is up, their free cash flow is down, their short-term borrowings is up astronomically. It's at $10.6 billion, that's a balance sheet liability, which is up 1,485% year over year. I know. Net working capital is negative, as is typical for retailers. However, it is about more than five times larger in the negative than it was at the same time last year. Now let's talk about what's going on with Walmart's business. Why are these numbers, looking so much worse than last year? Well, there are two primary factors that are affecting Walmart's business. Number one is inflation, and the number two is what I'm calling the get out of retail strategy. So first, record inflation is affecting Walmart's business in numerous ways. On the one hand, it is bringing in more middle and high income earners to shop at Walmart rather than more expensive stores like Publix or Whole Foods. On the other hand, it's putting a lot of pressure on consumers that they're spending more on groceries and less on other higher margin categories like apparel, electronics, and home goods. The overall result has been a reduction in margins, which is why EPS is lower than last year, even though revenue is higher. Now, in parallel to the inflation drama, Walmart is also trying to diversify its revenue in the get out of retail strategy. The company is launching and expanding numerous businesses to collect more B2B, that's business to business, and subscription revenue, both of which tend to be more stable revenue sources than retail revenue. During the earnings call, Walmart executives talked about three of these ventures: Walmart Plus, Walmart Connect, and Walmart Go Local. So Walmart Plus is a membership program that sounds suspiciously like Amazon Prime. For $98 a year, you get discounts on fuel at Exxon, Mobil, Walmart, and Murphy gas stations. You also get free Walmart deliveries on orders of at least $35 with some restrictions. That's analogous to Prime's free shipping on orders over $25 to $35. Now, starting next month in September of 2022, Walmart Plus will also come with free access to Paramount Plus streaming, adding in entertainment, so very closely following the Amazon Prime playbook here. They probably should have just called the program Walmart Prime instead of Walmart Plus. Now let's talk about Walmart Connect. Walmart Connect plugs into Walmart Marketplace as well as some other aspects of their business. If you don't know, Walmart Marketplace is an online marketplace for third-party businesses, operates very similar to Amazon Marketplace. Walmart has even started using its stores as fulfillment centers so that sellers have the option to pay Walmart to warehouse and ship their products just like they could do with Amazon FBA if they used Amazon Marketplace. Now, Walmart Connect is an omni-channel advertising marketplace. That means Walmart allows businesses to buy sponsored product positions on Walmart Marketplace, but also businesses can pay to place ads on the self-checkout machines or on the display TVs in the back of a Walmart store, which is pretty interesting. The number of active Walmart Connect advertisers is up 121% year over year. So that's huge. And the management team has said that advertising is going to be one of the main strategic priorities for Walmart going forward. So just imagine that, right? They're putting a lot of emphasis on advertising, trying to diversify out of that retail revenue, which is just hard. Finally, they talked about Walmart Go Local. Walmart Go Local is a white label delivery as a service platform for businesses offered by Walmart. Think of it like Instacart, but a white labeled version. Currently, customers are mostly large companies, but Walmart is trying to convince smaller businesses to also use Go Local to create their own on-brand delivery services. Now, looking at the overall picture, Walmart has currently replaced some of their management team, or they recently have, and they're also trying to do a lot of things at once. That does make me a bit concerned that they may be spreading themselves a bit thin, and or investing into non-optimal businesses. Go Local, for example, is basically a white-labeled version of Instacart, which means it should have lower profit margins than Instacart, since white-label products almost always have lower profit margins than branded products. But gig economy companies have struggled to turn a profit even with branded products. I also question whether the Walmart management team might be a bit too optimistic in their future outlook. In May 2022, Walmart's management said that Q2 was, quote, off to a good start from a sales perspective. Then midsummer, they revised down their guidance and said that Q2 was going poorly. Now they say that Q3 is off to a better start than Q2, but should we believe them? I'm skeptical.